We got a lovely scalp to open the trading week today. Watch the video thoroughly and carefully to see how you can make money as well, methodically and strategically, from the market every single day. I'll be going over in this video the current overall market context and the best trades to have taken today, using the timeless strategy with trend lines and important key levels. Hit the like and sub, and let's get some Benjis. Let's go over the current market context. So if we take a look at the SPY, that's the S&P 500 ETF. On the 1 hour chart, you can see that it sold off on Thursday. It reclaimed that 515 support level on Friday. And then in the pre-market, before the market open, it's giving us this chop within this range from 520 and 517, right? And so you want to keep these levels in mind, keep the macro in mind. We're kind of still in this chop between 524 and 515. And yeah, you just want to take note of the pre-market. The pre-market isn't really trending, it's kind of just chopping within a range as well. So not the best looking price action, but it's important to take note. A move can still happen from key levels and good trend lines and price action, so it's important to stay vigilant. On the QQQ, that's a Nasdaq ETF comprising of the important tech stocks. You can see as well, it's been trading in this range. Thursday had this huge sell-off. Friday reclaimed all that back to the 443 level, and then within this pre-market, we're trading between 439 and 443. That's the range it's giving us. It's looking a little bit choppy. And yeah, we don't know what it's going to do. All we can do is kind of take note of the levels and see maybe if it bounces from a certain key level, rejects it. Look at the price action, draw your trend lines. And yeah, let's get into the trade to take. Every day, I aim to take one great trade in a particular stock, preferably in the first 2 hours of the market open. And so let's get into the stock SMCI. So we'll start with the stock SMCI. This is SMCI on the 5 minute. So this price action is from Friday, and this price action is from Monday. You can see that, on Friday after the sell-off, it reclaimed this level right here and, bounced from that level. And then throughout the day, it faded back to the level and bounced again. In the pre-market, it breaks that level, retests it, and at that point, in the pre-market, it breaks it, and then at the market open, along with the market, it's kind of trying to retest that level. So this level is really important, right? It's around 930, and so you need to be able to map out these important levels, levels in which the stock has touched it multiple times, either bouncing, retesting it, pulling back to it. And what's the price action? What are the candle wicks showing us, right? It bounced here again. You see this bullish wick right here. Breaks it in the pre-market, and you could see these, bearish wicks right here. And so when you see these bearish wicks, it's indicating having selling pressure. It doesn't want to reclaim that level. It wants to sell back off, right? And so what I did as well, I drew a trend line, and on the break of that trend line, I got in for some puts, going short. You can see that it's a bear flag. Some could even make it some sort of wedge, whatever you want to call it. It's a retest of an important key level, price action with bearish candle wicks and a trend line. And these are all indications and reasons that give me confidence to enter the trade. So I entered the trade short, and I stay in it for about 20 to 30 minutes, and I decide to take my profits down this level at around 918. I got out on the bottom of this candle, so I made 10% of my money. When I entered right here on the break of the trend line, I'm setting my stop loss above this candle right here for a tight risk and further downside. These kind of setups happen every single day. It's timeless. You can back test it for yourself. Just, study on your own. Go to a cafe, open up the stock, go to the 2 minute or the 5 minute chart, map out your key levels, and on a day-to-day basis, it happens all the time. It should happen multiple times, if not at least one time. Sometimes it doesn't work out, Nothing is for certain, but, usually it's a high probability setup, and it's a setup in which you can have good risk management because you're setting your stop above the candle or below the candle in which you entered. And, if it hits that, you get out with no hesitation. Other than that, it should be a stress-free, anxiety-free trade because you just let it go. And until it hits your key level or your key target, you get out with a profit, right? So important key levels, draw your trend lines, your flags, your pullbacks, your wedges that have multiple touch points, and then look at the candle wicks and how they act at important key levels. And, the combination of those three should give you a good reason to enter a trade. Let's take a look at the stock NVIDIA. If you take a look at NVIDIA, this is the stock that we went over on Friday as well. And this is the trade that we went over as well on Friday. In the pre-market, it's kind of trending back up slowly towards this key level at 890. And at the market open, it sells off usually, right? Sells off to this level at around 870. And, from there, it's kind of pulling back. You can see that we had a bullish wick off that level. And so after that, I would draw a key level right here. Just for future reference in case the stock comes back to it. And you can see that it's pulling back, towards our EMAs, towards our VWAP indicator. That's the volume weight. That's a volume weighted adjusted indicator. So this is the 9 EMA, 21 EMA, and VWAP indicator. It's pulling back and it gives us this nice trend line, right, with multiple touch points. It's looking pretty clean. Sort of a bull flag or bear flag, if you will. And so what you would do is get in for some puts, going short right around here, at 876, 877. Set a tight stop loss above, these candles right here at 880 and kind of just write it down. I would write it down to this key level right here. I wish it bounced because you don't know if it bounces again. So to 870, 872 maybe. And, you can take some partials out as it, kind of chops right here at the bottom of this range. And overall, yeah, it should be a stress-free, risk-free trade. It never tries to, retest our entry. It just goes straight down, pretty smoothly. And you can't get greedy, once it hits your key target level right here. You saw that it already bounced in the morning. And so don't anticipate, the huge sell-off, breaking an important key support level. You can see that once again, it kind of breaks through and quickly reclaims that level. So that's why important levels are, that's why key levels are important. Draw out your supply demand zones on the higher and lower time frame. And once again, another instance in which we see a timeless strategy in use, in play. Let's go to the stock Tesla. So for Tesla, we have this key level at 167. And we can see that in the pre-market, it kind of slides down, bounces into that key level. And in the market open, gives us a huge bullish wick off that key level. And at that point, you don't chase it for the upside. You don't know if it's going to quickly come back down. You just kind of wait it out. Don't trade the market open. Look to wait and assess the market for the right high probability setup. So you can see it gives us a bear flag or a bull flag right here. And a pullback entry back into the EMAs. So you can draw this. And you can get in right here at around 171. Set a tight stop loss at around 170. And ride the trade up. You can take some partials out right here at the high of day. And then at the next leg up, take the rest of your position off or hold some runners. Once you see that, it hits your trailing stop loss that you should have set, you can get out for the remainder of your position. Another risk-free, stress-free trade in which it never tries to retest your entry price. So, there's no risk of when the stock made a move in your favor. At that point, it becomes risk-free because you set your trailing stop loss, and when you take your partials, you essentially lock in gains and ensure your profitability on the trade. You can also see the price action right here. On these EMAs, on these pullbacks, you can see these bullish wicks. Has bullish, has a lot of bullish buying pressure at this 170 level, that you can draw. That connects from, the pre-market to yesterday or to Friday and Friday's price action. And so a lot of confluences here. Just, map out your key levels, draw your trend line, look at the price action, and make your money. That wraps up today's video. Hopefully you can see how you could have made money as well using this timeless strategy involving trend lines and important key levels in trending stocks. I appreciate you watching. Please don't forget to hit the like and sub. I'm wishing you much success, and I'll see you in the next video.